investors. The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here. I'm the host of the Tiger Technicians Hour and the author of the Opening Call Daily Newsletter. We're looking at the Dow unchanged at this particular point, and the S&P down almost 4. But this is so fascinating. I drew these lines in as I did when I've demonstrated many times, and what I discussed in pattern recognition over the my Wednesday all-day webinar, and the archive should be out today. I think there was a little hitch over on Friday when it was about to be sent, so I think it's going to be going out today. But I drew this in not even dreaming that we could get back to unchanged in the E-mini, because everything about the action on Friday said there should be at least a give back, certainly with the Mariposa candle made in all, not all, but almost all the different key indices. That is like no wicks. That's what a Mariposa candle is, a big green candle, big red candle. Opens kind of almost gaps up. Doesn't leave any room at the bottom, not even a tiny wick or maybe a tiny wick, and it goes all the way to the top and closes at the high, or almost at the high. I've got a little forgiveness there. It doesn't have to be an exact low and exact high. I give a little room if there's a huge candle, which there was. And you expect after that there should be either a doji candle. This is my interpretation. So I have maybe 5 candles that I spent a lot of time with over the year. One is a Chapman Roman candle. That's my own candle. The other is a silent candle that comes either after or before, bar before or after a significant turnaround. You don't know it's going to be there, but that's the clue. And the doji, tiny little doji plus sign candle. These are things that I look at, and the Mariposa candle. So what's really important here is that I anticipated that the best case is, the very best case, which I didn't expect could happen, I wasn't expecting it to happen on Friday, and it did, was that there's a gap up and you just continue all the way through to the end of the day with a beautiful candle. I think we used up that kind of power on the very short term, number one. Number two is, my reasoning is that there's usually a doji candle and then a down candle following that, or after the Mariposa candle, there's a down candle. You don't actually make a new high, you just make a down candle. Well, we've made the new recovery highs, and you're pulling back just a tad down 5 in the E-mini. So this 10-minute chart, which I draw with a very nice left side, right side price time match to the 42.51 by 8:20, I typed in here. Well, it went to 42 at 8:20. Let me just pull back. The low was 42.53. Not bad. I mean, when it was up in the 42.60s. More than that. When I did the analysis, then I drew in and I said there should be this rectangle, long rectangle, narrow rectangle. There should be an attempt to get back into it between 42.57 and 42.65. Whoa. It stopped at the doji candle on the 10-minute chart, and then it continued higher, where above the 4 o'clock closing high in the E-mini of 42.8275. Today we've already gone to 42.84 round number high. So I suspect that a big chunk of whatever is going to happen has happened now this morning, and now we should see some kind of a consolidation. But does it mean on the short term we've raised the base? We'll get into that a little later on. Let's just get to a whole bunch of things that people asked me about over the weekend. And I had about a 50-minute webinar. I had a 50-minute video on Saturday, going through all our different positions and just looking at the market, what to anticipate, and everything about it. Said we should have some kind of a consolidation this week. But wait a minute, look at this. In the Chapman methodology, there are times when you have an alternate count. And alternate count means that you've gotten to, say, a leg E or an F, But there's a chance that it recycled, and especially if there's an instant restart. Well, in the Dow, it didn't make an instant restart. If it went right up to the 32,972.03 high of the 1st of August after 3 days, then I would say that absolutely is like an instant restart. Didn't have to make a new high, but if it almost touched that line, didn't break above it, I would consider that would be. But this is different. This is like a brand new restart, because the MACD is so strong on the daily chart. The 9 is way above the 14. The stochastic's flat at 91%. The on-balance volume is a tad over, not a tad, it's actually somewhat overbought. That's the only level of overboughtness that I've got. And then the 200-period moving average, this is the fourth candle above the 33,171 200-period exponential moving average. So the patterns that we've spent a lot of time on, both for subscribers and for the attendees of my webinar, shows you that lopsided rectangle that looks like a lopsided gravy cup rather than a pure U-shaped pattern has suggested that we are getting into an overbought level based on the 200-period moving average. This has always been, not always, but for a long time, it's been an attractor that if you go above it, as it did back in March, April, and going into the downturn in May after the April 21st high, it's like a magnet until it becomes a propellant either up or down. A propellant on the way down, push propellant. What would it be? A repellent. Yeah, repellent. Okay, so what we're looking at is it popped over. And now I think for the day, we might be done for at least today's major upside move. And now there's going to be a consolidation. Today's high is 33,779. So I have to change that from 67 to 79. I'll do that right now. And we've got a leg F. I'm going to take just a little bit of time because so many people are now using Chapman methodology. It's incumbent upon me to say that after the doji candle high going into the beginning of August, it pulled back, made a gray peak. I didn't actually want to type it in because it starts to look a little messy, but I'll type it in now. A gray A, which means that this new leg E becomes E/B, and this F becomes F/C, as I said to subscribers when I showed them this chart on my daily chart. Here, when I do this is what I do every day. I discuss exactly where we are based on the daily chart on the left that has moving averages plus a notation. The one in the middle is the same chart, the daily chart, except it includes the stochastic MACD and on-balance volume. And the one on the right has the 120-minute chart, which is possibly making a peak. And look at all these resistance levels. Automated Chapman wave resistance levels, 33,726, 33,621 in the 120-minute chart, and 33,913. And what I said to subscribers, even though we're long and we took just a tad off on Friday, I think it's the second time we've taken something off since our buy much earlier on in the diamonds, is that there's an alternate count and just enough strength to say maybe we have a little bit of a pullback, and then the 33,900s, we went to 33,000, what was today's high, 7 something. I haven't changed it here, but the 33,900s should become very strong resistance in the near to short term. In other words, over the week. All right, back to our story. We've got an alternate count F/C, another potential doji candle, but after not less than an hour, I don't want to talk about the day's candle. And look at the S&P. That emphatically has an instant restart. Therefore, it is. I'll be back in a moment. Basil Chapman.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks, we're back. So a couple of things. So the S&P, like the Dow, which is at an F/C alternate count, and the only reason we have it is you say, look, everything is strong in the Dow. I don't want to go to a wave count that says, oh, you've got to be careful, when in fact there's nothing here that says technically there should be some other than just minor weakness. So the notation in the Chapman wave at this particular point, I'm pretty strict. I stick to the major lettering, which is D, E, and now we're in leg F. But there's a chance that gray A there is in focus right now. I can't ignore it. That means if it pulls back, there might be enough strength just to make a nominal D, and then we pull back. I still think 33,900 is going to be very strong resistance. And if you go to the S&P right now, did I just do the same thing again? Why did it not go? There it goes. Okay, we're all set. S&P right now is in an F/B because after that 3 bars after peak D, making a new leg E, stopping at the 200-period moving average, the pullback didn't take out that trough at D. If it did, there's a whole nother connotation. We get a Chapman wave flat base restart. Then we even get a Chapman wave unconventional flat base restart that says, watch out. If that happens, you're coming right back to 4,100, and it should be within the next maybe 2-3 weeks. So that's not in play right now. And the QQQ just extended, also G/C, an alternate count. But at the 200-period moving average, and the others are just above, that just says that magnitude of the 200-period moving average. I never ignore it. You see, there's no reason to ignore it because it's had such significant effects since the February high of 370.10. Look at that dreaded H pattern. It broke down and went to 318. Then it tried to rally, and it pulled back to 317. Then it went up above the 200-period moving average for about 10 sessions, At 371.83, peak B became a peak B minus because it failed and did the Chapman wave dreaded H pattern. So I did not ignore 200-period moving averages. In fact, what happens is it becomes so important that usually by the third time or the fourth time, when there's a test, that's the one that you start to say, you know what, we've used up so much time in consolidating that this might be the inflection point that says, hoo-hoo. This time it becomes a propellant. We aren't there yet, but this is the one that says to me, now you've got to be looking at things like the weekly chart. This is the first time, last week was the first time it broke above the Chapman wave inside track repellent zone in the falling axe formation. And we've already extended that this week for leg B. Remember, this is a floating letter. The moment it goes above that peak A, that becomes a letter floating B, floating B, floating B, floating bee, talking about floating bees, looking at beautiful bees in the most fabulous plants and flowers at the, what was it called, Garden in the Woods in Framingham yesterday, Framingham, Mass. What a beautiful, we go there every 10 years or something. It is just fabulous. I'm going to go there even sooner because it's just beautiful. Anyway, talking about bees, this is the letter B, and it is now not a gray B, it's a blue B because the stochastic's at 82%, the MACD is expanding, the 9, well, the week is young, but the 9 is just gone above the 14 period. So that's the reason. Remember, I don't talk about Dow up in the sky, although back in my mind, I have a whole bunch of things that are going on. But that's not the issue. You've got to go one step. What's the point about talking about all-time highs of 36,952 when we haven't even broken officially the monthly? We've done it on the weekly, but look, now the monthly Chapman wave inside track repellent zone is in play until we get to the 34,350 level on a closing basis, monthly closing basis or higher. We just have to go one step at a time. So yes, I'm considering this is a week of consolidation. Could be a high-level consolidation, whatever it is. I think that 33,900 is important resistance. As I said, the QQQ as an alternate count. G/C, the IWM, has a leg F. And it also could be, it's a Chapman wave instant restart. This could be F/B. And the weekly chart, oh, I didn't even draw it in, has for some time now been breaking out above the resistance line right there, and this could become a midpoint to a test of the maybe called the 205 area. If this week, I don't know how it's going to do that, because there's a lot of pressure. Let me tell you, if it's able to get to 205, 7 points above where we are right now, that'll be fantastic action for the Russell 2000. All right, let's go to gold quickly. Gold is trading down 23. So the question came up, a few people asked me, could you go through the GDX? Why is the GDX only at a peak C, whereas the gold itself made a peak D? Remember Chapman wave methodology? You go from a buy signal to a buy mode at some point, and then that target says it should go to at least D. If the moment you mention buy mode, the obligation of that particular chart, although it might not know it, it's just between you and me, not even you and me in the chart, is that it should go to a D. Well, it went to a D just underneath the left side, horrible candle in July where it plummeted from the 1837 area down to the 1780 and then just continued lower. Well, it went to 18 on the continuous contract, it went to 1824.6 on the 10th, and now it's just a consolidation after a peak D. But the weekly chart, see the Chapman wave inside track repellent zone, look how important these things are. Look, make it green, then make it pink. Red just clashes a little bit too much, so I'll make it pink. New parallel, pink, and there it is. And that says, ha, that is strong resistance. It's in the just under it right now, but this is a weekly chart. We haven't even, it's 1 hour into the week, nothing. So what it says is this Chapman wave inverted falling axe formation that becomes an arch is potent for the resistance. And there it is. Look how it went right into, it touched the line, and then it couldn't hold it. The Chapman wave inside track propellant repellent zone. And there it is. It's trying to make another arch. So it's really important for the gold to get some support. Let's just see if silver's acting like this as well. Silver is acting, it went to a leg F today. Now it's pulled back very sharply. It's actually been a lot stronger than the gold. If you think of this, look, it's gone from 18 to 20 point, what's the high today? 20.870. That's a big position. 18. Let me just get that right. Yeah, that's a 10-11% gain. That's pretty good. But if you look at the weekly chart, it still says, you know what? A very, very weak action. And the 1-to-1 in the monthly chart did go below the extension that you would expect in the same time frame. So this is a really important bounce that was unfolding. It's not unfolding today. So silver's also acting badly. So GDX says it's trading at 26.36. Just for clarification, we do own the GDX. We have a position in it. I wanted to go there rather than to start going to individual stocks because I seem to be able to control my analysis I do every day on the GDX for subscribers. So I thought I'd stay with that. I'm not going to hang around too long. We're still up a little bit right now, but it's not acting all that well. So he sold, if it closes under 25.50, that is a weekly chart that is deeper than it should be under these conditions. I'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So let me just do this because a lot of people had asked me about natural gas. We have a stock that's a natural gas play. It's really a natural gas and oil, mostly natural gas. So it's done extremely well. We took a little bit off on Friday. I can't remember if it's the first or second time. And it did pull back today. And now it's starting to struggle a little bit. I think that it's acting quite well considering. But the natural gas contract, I spent some time on this over the weekend. My thinking here is that this is a pattern that, because it went a little higher than it normally does in the pattern that fails as a dreaded H or a single leg H to the upside and then come down, I'm looking at this and I think it's holding very well. I think on a shorter term, I'm beginning to look at this W pattern. It's a U with another U, which might be a smaller cup formation being formed that eventually turns into a W, right? W pattern, soft W, not a hard one like a capital W. This is a soft W. And we'll see what happens. And the question was for some people, one person who had the UNG, which is the trading vehicle, that was a lot better in chart formation, United States Natural Gas Fund, but it took too long to make that V-shaped pattern in the weekly chart. You know, I talk about the Groucho Marx eyebrows. Well, it's taken too long. And that just says to me that oil is one thing. Try to separate oil and natural gas. There were times where they would go together. There were times where they would be exact counterpoint. At this particular moment, I'm looking at natural gas because the winter's coming up. I think there's a different connotation here for me completely. I like the natural gas chart very much. Peak C in the monthly chart. I think it will go to a D. It might take a little time. This is August. Yeah, I think it's, I'm trying to do it off the top of my head. As I recall, it's late August, sometime in September, where it actually starts to anticipate the winter, and that's where it starts to move. But this is earlier than usual. This started in June. June the 30th was the low at 1828 in the UNG, and it's trading right now at 29.43. Hit 31 the other day at peak C. This is taking a little too much time. Left side, right side price time match. It can go another day or so, but it needs actually a screamer to move to the upside. It needs to very quickly start leg D above 31.52 in this particular pattern. Or it's going to take its time, and if it takes its time, you even have to consider the little doji candle of 26.01 on the 8th of August is in play. So if you're in earlier, then I'm just going to say your question was, where should I add? And my answer is I'd split it in two. I'd add a touch right now at 29.47, but then I'd wait this new entry as an add-on split in two with part of it here, part of it either at 28.20. It's at 29.45 right now. But if it climbs quite strongly today into tomorrow and can get to 30.25, I would then add a second position, and this first one, I'd keep this first one with a stop of a point, and the second one that I add, I'd make that a point. So 2 points risk for two positions, but I'd split them up. One at 29.46, the other one at 28.30 to 20, and each one would have a 1 point stop. That means the one that you get into now, going down, you'd be out of it on a 1 point stop. So if it means that you're adding the second, no, I haven't said that right at all. One position, small at 29.45 right now. That can have, because it's a small add-on position, just for the moment, it could have a 2 point stop. Into tomorrow, 28.32 to 28.24, and that separate one has a 1 point stop. But if you get that one, it better work right away. I don't want two positions with a 3 point stop. I don't like that. I'm not articulating this well at all. No, I just saw a position here, 29.53 or 47, whatever it was a moment ago that we were talking about, and I'll have to do this again tomorrow. Just to start this one off with a 1 point stop, and it's a split position. If you miss it, you can always add on strength. I don't want to add on weakness at this particular point, because this weakness says at 28.20, it's broken the 40-period moving average. That means it could go down all the way to the 50 at 27s, 26s. I don't want that risk. Right now, that's all you've got. You're going to add on right now and hope this one goes to a leg D. Whew. Sorry about that. Next question came in. Could I look at GFS. GFS, I think, is that global foundries and investments, manufactures semi-chips. Oh, I forgot. Global Foundry, GFI, down 78 cents, 83 cents right now, 64.12. It's gone to a leg E, and it's a potential Chapman wave instant restart. But in this V-shaped pattern or cup formation, once you break above that previous high that was peak C minus, and that was, I chose this, not the bottom because it was already too many bars, to use that one as a bar, and it worked perfectly. For left side, right side, I never even changed the color. There it is. Went to a peak D. So this is important. That is a C right there. And when I was doing this, we were down in the 50 area. So this is important. What I am looking at here, it went over 65. It's now trading 64.11. It's that monthly chart. And look at the semiconductors. We're long via the 3 times long position. It did get to leg D today. I didn't know whether it was going to be a peak C1, C2. It went above 245.74. It's on the 200 period moving average. This is where you see the struggle. I don't think there won't be a struggle. I think there will be a struggle going above and below and above and below. So at 243.83, I think the semis, I might be misreading this completely because I can't do it on fundamentals. I'm not able to get, I get news, a lot of news, but I think that there are enough fabs that are working and actually sending out chips at this particular point that, in fact, the glut is being alleviated just a little bit. I think that's what you're seeing in the SMHs. So let's go back to GFS. And GFS might be the canary in the coal mine on the good side, because it was an IPO back in 2021, around about the 45 area, screamed at some point to 70, came tumbling down, went to a low near 40, 43, then it screamed up to a high of, let me just give you that number, IPO all-time high of 30 in March of 2022. It went to 79.49. So 79.49 down to 35 is over 50%. 49. Right? It gets cut in half, more than half, goes down to the 35 area. And now it's a beautiful rally. And it says to me that global foundries might be telling us that a lot is going right, a lot more than is going wrong. So that's all I'm saying right now. I like the action. What was the question? Could I just show it, GFS? Yes, GFS was just a question to show it. I like this cup formation. It makes this whole area of 57 to 53 really important support. That's 9 points. That's a lot of points on any major turn down in the general market. And as I said, I think right now we're in a consolidation phase for the week. Even if we make slightly higher highs, I think it's really consolidated. And this is acting quite well. So those are the levels I'd look at. Most importantly, if in August at any point it even touches 68 to 69, that's great.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So a question came up. Let me just do this. I think that's an E. No, it's not. So a question came up about, let me just see. So I just wanted to EXK. So EXK is Endeavor Silver Core, and it's trading at $3.37, a little doji candle. It's down 16 cents, but it made a peak G in the daily chart, and that weekly chart suggests that it's still very negative and that it needs very much in August. I'd even give it a first week of September to be trading at $3.87, getting close to the $4.05 200-period moving average, which it hasn't even been close to since it broke down back in April at $4.50 in that cup formation. Now what we're looking at is it's just at a lot of bars, and it is still green. It's almost close to turning red in the daily chart, but it's not good action at all. It was good action going into that leg G about just over a week ago in the 380s, but now it's just given back, and the technicals are starting to weaken. So yeah, that's all I can say is I would personally, I don't think this is one I would add to. If there was stronger in the weekly, I'd say, oh, good, coming into an area where you could add to, because it's better than halfway, above halfway of the entire move. No, I don't quite like what I'm seeing here in the weekly and the monthly chart, suggesting it's a real problem. So EXK, just be real careful. Endeavor Silver, it needs to hold the 320s this week. I'm giving it the entire week. If it closes at the 320, that really changes that weekly chart and messes it up. If it's able to stabilize, get back above 352 to the 357 level, that's going to say, oh, thank goodness, now it's finding support with the 9-period moving average again. Next question I had was, would I look at HS, was it just a statement or whatever? HSY, which is Hershey, the Hershey company, chocolate and candy. Double topping, well, I shouldn't say double topping, trying to get back to the most important high that it made back in, I think it was April. Let me just check what that is. April, it goes to 231.60, and then it dives down to the 202 level, and now it's come back again. This is really good action. I can't believe the prices of the candy bars and stuff. I was looking at, I always gauge things by what we used to get in South Africa, Cadbury's. That was Cadbury's, just a Roundtrees or something. Anyway, Cadbury's hazelnut and Cadbury's plain, and just all these different Cadbury's. And it used to be, just recently I saw, it was two for $5, and then I saw the other day 2 for $4. Yesterday I saw one for $3.85. And the Hershey company is doing the same. Now, does Hershey own part now of Cadbury's? Anyway, whatever it is, the prices are exorbitant. I don't know why Hershey should be moving up like this. Maybe it's because they're making so much money. And then, of course, you still got Halloween coming up. So it's acting really well at 229, 232, 233 stars this leg C up. And it'll be in the weekly chart, leg D. It'll be leg E in the monthly. It's holding really well. Great candle today of 397 at 229.73. Yes, leg B acting very nicely, going to cup formation both in the daily and the weekly. Oh, I should say all three time frames. So acting well under these conditions, not going to fight. The price is the price, and the price is acting very nicely. MACD is okay. Stochastic's not so good at 68%. On balance, not so good. But the 9 is way over the 14. I think that's what's helping it. I'm going to watch what it does if it can get into the 230s and show that it's still building strength as the MACD improves and the stochastic gets to 77 or even 82%. But if it stalls over here, you got to be a little careful. No, it's acting extremely well. It's one of the winners today. Snap, SNAP. Snap this is a leg E. Now, I need to talk just a moment about gaps. My rule of thumb is that on the left side, if you see a huge gap, if that gap gets filled in decisively, meaning it goes quite a bit above the gap high, in this case it would be 15, let's say go into the 16s in the next 3 weeks. It's at 12 right now. That'll say something has turned around and it's snapped to the upside. It is acting extremely well. Right now, on a short-term basis, it's acting very well, but it looks more like short covering. I don't think the business has turned around to be able to fill that gap, whatever that gap news was, that goes from mid-15s down to 11. I mean, really. That is just a whopper of a gap. So a lot of work needs to be done. And I'm not sure this has a pattern in the daily, but the weekly chart says if at any point in September, I'm giving it all the way to September, instead of breaking under 9, all of a sudden Snap, which is what, cameras, social media, camera company or something, developed some private applications, I think. So Snap trading at 12.16, up 54 cents today, up 4.5%. If at any time in September it can have a close, the 15.16 is the 14-period moving average, not good enough. The high that was made of 16.55 the week of July the 22nd, if it closes above that, it says that ugly candle, talk about ugly candles, that horrible candle of May, where the high was 23.31 and the low was 12.55, it means all of a sudden that becomes your target area. That is huge. So that's a lot to ask. I'm not sure if there was even a question there. I just saw it mentioned. Hershey bars, addictive, go long sugar, coffee, tobacco, sugar. Yeah. AQMS, what is AQMS? Oh, very nice. Remember, the bar that makes the low cannot be the high, so that's peak A, that's peak B, that's peak C, floating letter D, then it makes a peak D, floating letter E, and it's in E right now to $1.10. Yes, that's a much better looking, and whatever it is, Aqua Metals Inc. So they probably have rare metals. I don't know what it is, but this is a much better chart. And once you get halfway into the wick, on a shorter term basis of the Chapman upside down Roman candle, that means 107. It says there's a good chance, this is a weekly, so it has to hold there. But I would say on a daily basis, if it can close in the 1.08 area or higher in the next 2 days, it says there's a chance that over the next 2 weeks or so, you could get to the 1.30, 1.22 high of the 17th of June. So and the key support now is at 0.94 to 0.90. So that's good. So let me just quick couple of questions. Thank you. Good. Look at SBUX. Oh yeah, we're talking about addiction. SBX has come back nicely. It's sitting right on the 200-period exponential moving average at G/C, an alternate count. And I'm very comfortable calling it an alternative count because it's right on the 200-period moving average, which was way under. It's at 88.70 right now, up 40 cents. And once upon a time, just in May, it was trading in the 60s. I mean, this is really, 36% or something gain? This is very good action. It means that the magnet now of the 200-period moving average, anytime it pulls back, unless it pulls back under 82, any pullback above that says it should come back and respond to that 200-period moving average by tagging it. So that's a good sign for Starbucks, but you are talking about a stock that was once in the 120s and did plummet down to, what did I say it was? Down to the 68 area. I'll be back in a moment. Dow's down 34, S&P's down 13, and we've got a couple more questions that people are looking at. Yeah, I'll be back in a moment. Basil, Chapman, Dow's down 37, S&P's down 13.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. A couple of things that I was asked about. Last week, I was asked, could you show me peak C1, C2s? In other words, where the price goes to exactly the left side high or just under it. And it didn't have enough strength, but the technical suggested that there could be a pop to a D, and it didn't get to the D. That's a peak C1, C2 in the 1-minute E-mini chart right there. The high that was made at 10:34 this morning at 42.77, round number, and then it tested it twice at 10:43, went to 42.77.00, then 42.76.75. So that's like a peak C1, C2, and therefore you can start a bit of a pullback there. I've already drawn in the rectangle formation that I think we're trading in, and the target is 42.65, and I would say by about 11:15. So in the meantime, back at the ranch, let's get back here just real quickly on semiconductors. I love this chart, and we don't have it at all. Yes, this is almost the pattern that we saw in the 120-minute chart. Look how patterns repeat. 70.26 was the high January the 7th. It pulls back sharply to 45 and then bounces 2 days ago. Today's high is 71.96. It went to just above that yesterday. It went to on Friday, it went to 71.98. The round number 67 open. And here it is. This can only be called an A. On the way up, but look at that. You've got Chapman falling ash breakout to the left side high, and can it hold it? That's the big issue. Leg D in the monthly, so that's on semicomputers. I did a bunch of things over the weekend, but here's another question that I was asked about. Could you just show the XLF right in leg D at the 200-period moving average? Leg A in the weekly chart is a good attempt at a turnaround. It's going to be really important that all week it doesn't close under 34, but it attempts at least another little pop to the upside, maybe 30, 35, 70. It's really important that the financial holds very well in this and rally for this particular fake. Oh, and Schwab is a question. Oh, I don't know anything yet for Schwab. Let's wait for a big pullback. Sharp move up to leg E. And if you have it, yep, that's just great. If you want to take it just as money management, that's fine. I'll be back tomorrow. Stay tuned. We've got Steve Rhodes coming up. Got a great program.